So we are right up 7 o'clock, and it is Wednesday evening, and this is Alignment Vision Action, and I am your host, Laurel Rutledge, and we have a special guest tonight, and I'm sure people will start popping in, and we've got Jenny on stage as well, my amazing producer who's going to be helping us out,
Hello.
and I cannot wait for this conversation with Ashleigh to talk about not only just alignment vision action in general, but how sometimes we forget that when we're getting aligned with ourselves, we're setting that clear vision of what we want, and then we're starting to take action, even if we think about how much something is going to cost us or what money we want to make. We don't necessarily put the whole picture together of what some options are or what we should be thinking about. So we're going to dive into that tonight with Ashleigh. And so when you get this, when you come in, we want you to ask questions. If you're listening to the replay, send us a note. I've got her bio in there, I believe. And so if not, I'll make sure it's in there, and the way you can contact her. So why don't we start here? So Ashley, maybe tell people a little bit about who you are and what you're doing and what this money thing means to you.
Yes, I love that. Well, thank you so much, Laurel, first for having me on your show. I'm very excited to have this conversation as well. A little bit about me. I'm Ashley from the Philadelphia area, and I have been in the finance industry for, 10 years now. I can't believe that, but time flies. And I really just love being able to create a space where my clients feel safe. They feel like they're not being judged because we've all done things, right? That we're like, oh,
Yes.
why did I do that? Right. But it's not about that, right? It's about looking at what the future is and how we can get to where it is that we want to be, but actually creating a plan that manages both the risk management and the goals, right? Because everybody loves to talk about the sexy stuff, but never about the stuff that, well, what if this happens, or what if this happens, or what if your train derails, et cetera. So my job is really just to help my clients see, okay, this is the big picture. And these, like you said, these are the options, but this is what could get in the way, right? How can I make you bulletproof? How can I make sure that if you say, Ashley, at the age of 70, I want to buy a house in Italy, I don't want nothing to get in my way. The goal, right? The goal and the dream is always going to be there. Like, I want to do it. I want to do it. It's like, okay, but what is the plan, right? What are the action steps? How do we get there? Where do we need to be in 3 years so that at the age of 70, we're going to be there? So my goal is really just to help my clients. Yes, we see the goal, we see the plan, we see the vision, but what is the plan? What are the action steps and how are we going to get there? So it's just to make people comfortable. I mean, money is one of those things that a lot of people don't like talking about, right? It's like, well, it's a taboo topic. I should know this already, or I should be farther than where I am. But just start, right? That's my biggest goal. Just start where you are and go.
Yeah, I love it. And what the best thing you said was bulletproof money. I love that. I love that. Let's be bulletproof about our money. And welcome, Woody. Welcome to the show. So you know, I don't even know where to start. Well, let's start here. So a lot of times, and what I love about what you said was let's think about where the goal is, and then how can we get there, and then that whole idea of what can get in the way. Because my risk management mind, right? Like I came out of enterprise risk management, so not necessarily the insurance or the finance, but anything that can get in the way of you achieving your goals. That's what we did when I was at Deloitte, and so that speaks to me, and I think speaks to a lot of people. It could be reputational, right? It could be financial, it could be physical. What are the risks? So if we talk about how someone finally decides and gets really clear, here's what I want, right? I want that house in Italy. For me, it's that house in Belize, right? I want that house in Belize, that house in Portugal. That's what I want. And I want to have that at 70. I want to be able to just pack up all my stuff and move or sell everything I own and be in this place full time, blah, blah, blah. And I am now 30. Right? So theoretically, I've got 40 years to get there. When you talk about kind of bulletproofing your money and giving people a safe space to really have those conversations, what are some of the things that people need to think about to truly align their money with that vision?
Yes.
And their money actions, right, with that vision?
Yes. Very first thing that I think of is your cash flow management, period. Because it's so easy with plastic. We just swipe, right? all day. And it's like, all right, I got it. I got it. My account's not at zero. I got it. I'll just buy it, right? But the goal is to make sure that every dollar has a destination, right? Whether that destination is a savings account, whether that's a utility bill, whether it's future college kids' education expenses,
Right.
whatever that is. But you know exactly where every dollar is going to go so that you don't end up overspending. Because anything else that you try to do, invest, save, get insurance, whatever, it won't work if you're not accurately focusing on your cash flow. Some people are afraid of the word budget, so I try not to use it. I've changed it to cash flow management, right? It's like, I don't want a budget. That means I can't go to Starbucks, right? And it's like, no, you're just managing your cash flow. You got to figure out where things are going, and you have to know where it's going to go, right? That's
Yeah. I love that. Every dollar has a destination. I love that. Because you're right, that budget, even that budget word for me, I'm like, ooh, and I'm an accountant. My undergrad is in accounting. And I still, and it's weird. And so for those of you who are still working in corporate and those of you who are now entrepreneurs, or maybe you're kind of a mix of both, when I was in corporate, like every 2 weeks, I was going through, even when I do everything online, I was going through my checking account. What did I have? How did when I started being an entrepreneur, I don't look at my money nearly as much as I need to. And it needs to be more. It needs to be more. And I think it's that kind of, look, I don't have nearly as much coming in yet as I had when I was in corporate. Do I really want to know what it's a fear factor, I think, a little bit. So how do you help people? So they got the budget word. So you kind of change that, right? Let's talk about cash flow.
Yes.
But how do you get them over the hump of, I need you to look at the money?
You know what? I got to be honest. That's probably the hardest part because it's easy to talk about investments for me. It's easy to talk about insurance. But a lot of my job is about behaviors, right? So I'm either creating a new behavior, I'm managing an existing behavior, or I'm maintaining a good behavior, right? So a lot of it is it's all mindset. It's all here and it's all between the ears. And to be honest, sometimes I just have to call it out. Like, hey, you're avoiding this. And it's normal, but let's pay some attention to this, right?
Yeah.
Answer my call. Like, right? But no.
Yeah.
Like, just calling it out. And it's like, hey, I know that this is uncomfortable, but be glad that we're having this conversation now.
Yeah.
And think of 65-year-old you, and you're going to be like, wow, I'm so glad, Ashleigh, that you pushed me. I'm so glad that I stuck to having this conversation. There's no easy way, honestly, but I have learned to call it out respectfully.
Yeah.
And just say, hey, it's normal that we avoid these conversations because it's uncomfortable, but kudos to you for having the conversation now. Let's keep going so that we're not
now.
Wow, I wish I would have.
Yeah. Instead of like, oh my God, I can't, my mortgage is due. Where's my money? Gina was saying the same thing happens to her, that avoidance of looking at the money. And I've actually got on my calendar. I'm like, Laurel, you need to go back to every Friday. Cause at first I upped it. Every Friday, look at your money. Every Friday, not every 2 weeks, but every Friday, look at your money and see where it went. And it's weird because I absolutely do an annual. So I actually changed some of the platforms I was using and things like that. I'm like, what is way too much money? I'm not using everything, and did the calculation. Like, you know what? This is going to save me $2,000 a year, and that doesn't seem like a lot, but that's a lot of money. That adds up, right? I'm like, I can use that for something else, right? So, it's getting over that fear of having the conversation, and so then. When we talk about setting those visions and making sure your money is a part of that vision, beyond just what is it going to cost me to do the thing I want to do, right? Or how much money do I want to make because I want to invest or I want to start my own business? What are the other pieces of that money conversation that you encourage people to have when they're trying to set a goal?
Yeah. So it's definitely taking a look at what you currently have first, because your savings, not deferred spending, savings.
Yes.
Deferred saving, right? Because we've all done it again, where we hop in line and we're like, no, we just transfer this real quick,
right?
Into my checking account and spend it, right? But we're looking at what is an account where you can, for sure you're not touching this. This is emergency savings for at least 6 months of your total expenses, right? So if you're spending $2,000 every single month, you gotta have at least $12,000 sitting in a savings account that you don't touch. My advice: It's having that not at your main bank where your checking account is, not where your debit card is. Have it at a credit
Ah,
union, have it at an online bank, maybe something that you don't easily
yeah.
have access to. So you can't
Mm-hmm.
transfer that on an app while you're standing in line. You're not tempted.
Yeah.
Kind of one of those out of sight, out of mind things. It's like, all right, I
Mm-hmm.
know I'm saving into it, but I won't touch it. Okay.
Right.
That's first, because at the end of the day, we're talking about vision, goals, wanting to do things in the future. That's all dependent on you making an income.
Yeah.
That income's not there. What are you falling back
Yeah.
on, right? What are your options now? You need to have something sitting there. And then you need to make sure that your income's protected. Most jobs offer this, but again,
Mm-hmm.
a lot of us are entrepreneurs, but if
Right.
not, we don't look at what the jobs offer. They kind of like, here's your benefit package. Good luck.
Right.
Welcome to the career, and we sign on the dotted line and we keep going.
Yes.
But having the opportunity to sit with an advisor and really just go over
Mm-hmm.
those things to see what could get in the way. Because
Yes.
I can have all the drive, all the hustle, all the vision goal. I can be ready to go. But if I get into an accident and I can't work for the next 2 years,
Yeah.
that
Yeah.
pushes
Then
me back.
what?
Exactly.
Yeah.
Exactly.
No,
So
that's really good. God, that's good. And what's interesting about that is, there were a few things that I did. Like I've got a really good friend of mine in California that especially when he was in oil and gas, he's like, you know what? And I tease him all the time because and he'd kill me, but well, maybe he won't. Because he bought a condo like years ago. He bought a
mhm,
condo in Hermosa Beach, like 2 blocks from the beach, right? It's exponentially more valuable now than when he bought in. And I remember we used to talk about the fact that he's like, "Oh, but I'm so poor. I'm so poor." I'm like, "Look, you're poor. You're not normal people, po, right?" And so he said, "Yeah," because he slipped one time, and he's like, "Yeah, I found this money the other day." I'm like, "What do you mean you found money?" He said, "Yeah, I've just been taking money, just having them put it in an account." And he said, "And I just happened to go look at it the other day." He said, "I didn't realize I had that much money." I'm like, "Oh Lord, see, that's not po."
that's not I don't know what
That
you're
is
talking
not.
about.
But that's that idea of, like you said, do an automatic move. So it's just gone before you even think about it. Just put it somewhere. You don't have to actively move it. It is moved for you. There's so much power in that. There's
So
so
much.
much power in that. Now you mentioned online banks. So there's all of these Green Bank and Chime Bank and all God's children got a bank now.
Exactly.
But there's also, at least my concern is, what about FDIC, and I just didn't go to a credit union. What is it from your perspective if someone's really wanting to make sure that they're protecting their long term for putting it away? And we're talking about options, right, for money.
Okay.
Are those online banking institutions really viable options for people? And if so, what are the things they need to consider?
Great question. So I do think that they are. However, always do your research. Make
Hmm.
sure that it's FDIC insured. You can't have more than 250,000 in any one given account based off of social security numbers. So you have two people on there, that's
Right.
500,000 total for each person, three people, 750, etc. Right? But you can't
Hmm.
have more than a certain amount. So if you know that you're going to have more than a certain amount in one bank, go to another bank, or you should be
Hmm.
investing that money at that point. But
Hmm.
always make sure that they are insured, right? So, like you said, all God's children got a bank now. For me, it's got to be a
Yes.
reputable company that's been around for
Yeah.
years, decade. Like I personally haven't tried any of the very new kind of, hey, this is Russell Simpson's
Me,
bank. Like I don't care about any.
same, right?
It is, right? But to
Yeah.
each his own. But if you're going to make that decision, 100% do research on the bank. Read the reviews because
Hmm.
they don't. People are out there saying like, I had a great experience. I had a terrible experience. Someone broke into my account. There was fraud. Never got my money back. Right. So
Yeah.
things.
Yeah.
I don't want to endorse any one bank, but
Right.
definitely 100% look into all reviews, all of the credit ratings, because all of these financial institutions are rated as well. A,
Yes.
B, C. So just take a look at, what the rest of the world is saying about them and then make
Hmm.
your decision from there.
And it's so good because I was just having a conversation with somebody the other day, and then so this is on topic of money, but a little off topic of the line of vision. Actually, it's more industry topic. So because we were just talking about banks, and so I was talking to a friend of mine the other day, and I'm like, I'm looking at these banks and these other financial institutions, so in the finance industry,
Mhm.
and they are making billions of dollars.
Oh yeah.
And so I won't even go into the conversation around redlining and predatory lending and all that. So we want, that's a whole different show. But we know they're making billions of dollars from people. And yet, and yet, if you put your little savings account at one of the big banks, you get 0.00000000001% return on that money.
Maybe.
Maybe on a good day,
Yeah.
right? And they're going to charge you like if you don't have a certain amount of money, they're going to charge you for holding your little money in the account. It just blows my mind. So when you're talking to people about this financial impact, and good evening, Joy. Thank you so much for joining the show. We're talking about money and thinking about money when you're really setting your vision. So when you're talking to people about this money question and savings, right?
Mhm.
And putting things away for that house you want in Italy or for that business you want to build or just for the car you want to buy.
Right.
When you're going through those questions of where do I save? How do I get the best return? Whether that's true investments, because people have different risk tolerances, right? Whether it's
Of
true
course.
investments or whether it's I want to start out small, so I want to find a place to like hold my money that's not under my mattress. How
Hmm.
do you help people work through that for a good return?
Yeah, great question. There's so many different options. And to me, it's all about diversifying, right? Because
Mm,
everything's going to have a different place where it should go and should be, but it's all about the time frame as well, right?
mm,
So of course, if
okay.
you're saving for retirement, you can save it in an account that you don't have to worry about. It's going to go up and down for a couple years, but
Right.
overall, when you look at it over 30 years, it's going to give you X amount of return, X amount of positive return. Well, that's
So
great
like
because
your IRA or something, right? Your 401k
exactly.
kind of thing. Okay.
Hmm. So if you know that's going to be in the market going up and down, but over 30, 40 years, it's going to be high, who cares? It won't
Yeah.
stress you when you look at it every other day,
Mm-hmm.
right? You're like, all right,
Right.
whatever. It's going to do what it's going to do. And when I'm 67, I'll deal with that, right? So
Right.
that's,
Right.
that's one thing, right? But when you're talking about something more short term, maybe buying a house, a car, you want to get that, say, 2 or 3 years, now you're
Mm-hmm.
looking at, okay, if I don't need this money, I know I don't need to touch it. I have a savings account set aside. I got at least six months and I'm good.
Mm-hmm.
Now we're looking at, okay, mutual fund would be a good idea, ETF would be a good
Mm-hmm.
idea, and somewhere where we could say, okay, I'll get more interest on this, but I know that I can't touch it for at least 3 to 5 years.
Mm-hmm.
Okay.
Mm-hmm.
But I think a lot of people get lost in the, oh, I gotta have so much cash or I gotta have so much liquid. And
Ah.
it's like, nope, you don't. And I think that's
Hmm.
probably the biggest hump that I get over with clients is like, I have 2 years worth of liquid savings, and I'm like, why do you have 100,000 sitting in a savings? You're losing money at this point. Like you would be
Yeah.
better off leaving it under your mattress. That's how much money you're losing,
Wow.
right? So the goal
Wow.
is
That's
to,
good.
yeah, just get them comfortable with getting closer to that. Like I said, 6 months, 12 months, if you're really conservative, of just
Mm-hmm.
how much expenses you have per month saved up in
Mm-hmm.
a savings account. Everything else can be invested based off of the goal and the time frame, right? So whatever it is
Okay.
that you want to be saving that towards, then like I said, we're looking at either insurance investments, mutual funds, IRAs, annuities. It really depends on the time frame and what the goal is
Mm-hmm.
for the money at the end. So if you say, Ashley, I don't need this money for 10 years, okay, we have more options. But if you need it for three
Mm-hmm.
years, maybe you don't have too many options. But if you don't have a
Yeah.
savings, I honestly would never recommend investing harsh like that. I'd
Yeah.
say start saving because
Yeah.
if the market goes down, but you hit an emergency snag, you're calling me, you're selling your investments low, and then you've realized your loss. Then it's like,
Yes.
I don't want you cussing me out.
Yeah.
So
Yes, exactly.
let's save the money. Let's save, save, save. And then when we're at a
Yeah.
good, comfortable point,
Mm-hmm.
sky's the limit. You do not need to have hundreds of thousands in cash. You don't.
But talk about that a little bit deeper, Ashley, because as they say, cash is king, right? And money talks, right? And so being able to be liquid. And I think my financial planner, I have an IRA, but I have a part that's liquid and a part that's like not, or something like that. So there's one that if I need something quickly, I can get to it because it's already in cash. You don't have to like sell anything.
Right.
But talk a little bit deeper about liquidity. What does it really mean? Because maybe that's it, because words matter, right? What
Yeah.
does it really mean to be liquid? And how
Hmm.
liquid do you really need to be?
Yeah, I think it all depends on specific situation again, but overall, liquid just being this is something that I can easily access in the event that I need it.
Okay.
So, like I said, you have that IRA, small portion of it, hopefully just a small portion of
Yeah.
it is
Yes.
in cash. If you need to take it
Hmm.
out, you got it. You don't have to worry about selling anything. Got a savings account
Hmm.
that's in cash, you got it. Don't have to worry about selling anything, right? Savings account, you do have to go to the bank. You got to, meet some people, but pretty instant, right?
Right.
You
Right.
have um think of your home, right? An asset you can put on your balance sheet for sure,
Yeah.
but illiquid because you have to wait. You have to go through the selling process. You have to wait for somebody to sell,
Hmm.
et cetera, et cetera. So
Hmm.
knowing that you have something that is, can easily be turned into cash is liquid. Knowing that you own something that can't be easily, it can, but can't be easily turned into cash, may
Hmm.
take a longer period of time, means that it's illiquid, but overall you have this bunch of assets that goes into your balance,
Hmm.
right?
Hmm.
The goal would be to have, I'd say, somewhere between 10 and 20% of total assets in
Hmm.
something that's liquid.
Ah, okay.
That's why I said it depends
Okay.
on total situation too, right? So my goal
Hmm.
would be, say we're saving 100%. Here's our income. We're saving 20% of that.
Hmm.
20% of that is going towards your fun stuff, your lifestyle, traveling,
Right.
shopping, whatever you enjoy doing. And then the other 60% normally is going towards your fixed expenses. You got to pay your
Hmm.
mortgage, rent, car bills, and things like
Hmm.
that. So that breakdown, that 60-20-20, usually gives people a guide to say, okay, I know that I am not saving enough. Let me do more.
Hmm.
Or maybe I'm spending more at Target,
Hmm.
Starbucks, then, right? We all do it, right? But the goal would be, okay, how can I make sure that at least 20%, somewhere between that 10 and 20%, if it's a bigger
Hmm.
number, then that's where we get less than the 10%, is
Hmm.
where if something happens, I don't have to sell
Yeah.
my house. I don't have to sell my car. I don't have to sell my kids' college education. I will be okay. We will be okay. And we can figure out what to do next. And the only reason I
Yeah.
say, I keep bringing it back to that risk management because that's the most important piece. We can dream all day.
Yeah.
We're in control of that. We're in control of what our future is going to be based on however
Hmm.
much work that we put into that, our hustle, our alignment, our actions that we do to get to that vision. We can't control if something's going to come up,
Yeah.
when it's going to come up. Can't control
Right.
emergency, accident, and illness that we didn't foresee. We can't
Hmm.
control that. So I can sit and talk all day about goals. I love to be able to know, what do you want to do? Where do you see yourself? Where do you see your family? What are the things that you want to do when you retire? But if you
Hmm.
never get there because you got sick and you had to stop working, then what does life look like now? What is our backup plan? Nobody wants to talk about plan B because plan A is going to work. I got it figured out. It's
Right.
down, right? But where do we make sure that we're covered and we're protected, right?
Yeah.
So that plan A will always happen regardless of what life throws at us.
Yes. I love that. I love that. Welcome to the show, Sonia. Thank you for being here. Yeah, God, Ashley, this is so good. So I as I'm listening to what you're saying, especially around the 60-20-20, and really I'm thinking about, and Sonia, we're talking about as you really get clear on the vision, the thing that you want, often we forget about the money piece of that because we only think about how much we might have to spend and how much we want to make, but we don't think about kind of necessarily a strategy around money to support the vision. So that's why I've got Ashley on here talking to us about a little bit deeper about money. So Ashley, as you were talking about this kind of the 60-20-20 and what you put away and being kind of liquid, for those people who are moving more in the entrepreneurial space and are thinking about, I want to buy a house, I want to buy a car, I want to, credit gets really weird.
Oh yeah.
And the way people look at you gets really weird when you don't have a paycheck, right? When you're having to make your own thing. And until you have real consistent or really big, you've been around 10 years or whatever, it makes it really strange. Are there strategies or tactics that you work with some of your clients that may be entrepreneurs in one, protecting their credit score, but also thinking about how they plan differently for that house purchase or that car purchase when, somebody's going to say, but you're not working for anybody. I need, 12 years of tax returns or something. And they just don't have that.
Right.
Yeah, it's ridiculous, right?
Trust me, I know.
Yeah.
I do know. So, A little backstory about me. I am an advisor,
Yeah.
but I am considered an independent contractor. So I'm not
Mm.
considered a W-2 employee. And my fiance is also a business owner, and we just purchased our first home. So I have so much
Oh,
experience about what you're talking about right now, how everyone just
good
looks at
for
you.
you.
Thank you.
Yes,
Thank
that's
you. So,
awesome.
they definitely look at you different. It's like, well, we have this question, and well, we want to know
Yeah.
this, or well, we want to know that, right?
Mm-hmm.
But from my professional experience and then personal experience, I think, the first thing I always say is plan ahead. Like, plan ahead as
Mm-hmm.
much as you can as possible. So if you know for a fact, Ashley, I want to buy a house in a year or 2 years, the first thing I say is like, have you done your taxes?
Mm-hmm.
You cannot get around it. Like, they want to see
Yes.
your taxes. They want to see your transcript. They want to see
Mm-hmm.
if you owe anything, they want to know. They want to see everything.
Yes.
So if you haven't done it and you can go back and do it, go back and do it. And if
Mm-hmm.
not, start it now and at least get your 2 years in, right? Be
Right.
as consistent as possible in your
Mm-hmm.
savings and in your income and how you're going to be making money, how that's going to come in. Totally,
Mm-hmm.
I understand, like I said, as a contractor, as an entrepreneur,
Yes.
how some months are like this and other months are like this and other months you're like, did I work this month? Right? So
Right.
it happens, right? So
Yes.
as
Yes.
much as you can, be consistent. And when you have those bigger checks and you can save more, because the more that
Mm-hmm.
you have to put towards that down payment, whether that's the car, the
Yeah.
home, whatever that looks like, the better it looks. You just look more financially responsible. And I'm saying this just
Yes.
because I was an underwriter in a past life before I did this, and that's what they told us to look for. It is. That's what they told us to look for.
And that's the thing. I think when we think about the system, as I said earlier, we'll find a time to talk about some of the predatory lending and all the other stuff that happens. But the reality is the system is what it is right now. Beyond that stuff, that's systemic issues. The system in general looks for so much collateral and so much proof that you can do whatever the thing you're doing. And I think about people who are young entrepreneurs. Like I interviewed someone who she started her business right out of college. And so now she's been in business like 13 years, right? And her business is great. She's doing a really great job. And so she doesn't necessarily have this issue now. But when I think about her, I think, this was a young person coming out of college, starting a business, not only trying to get business credit, right, to fund her dream, but getting her apartment. If they're Because they're going to be looking at your background check, they're going to be looking at finances just to get an apartment. That
Mhm.
just all of the things.
Yes.
It's almost like when people are trying to get the first job. It's like we want experience to give you
For
experience.
experience.
It's ridiculous as an HR person, right? It's just
Right.
ridiculous. I
Oh,
can't say it's entry level and ask for 5 years of experience at an entry level. Seriously. So as people are planning, especially as they maybe are just not necessarily starting entrepreneurial, but maybe they're just starting over in life. They've had some kind of catastrophe or some kind of real hard thing happen. So they're having to start over.
mhm.
You know, you talk about the savings, right? Do as much as you can with what you have. What are some of the other things from a financial perspective they can start thinking about that hopefully won't get them into a mental, downward spiral? But what are the things that they can think about that they can do even if they're in a tough situation? What can they do to kind of begin to move forward and get themselves to a place where, no, I got my apartment, right? I'm eating more than ramen noodles.
Yep.
I'm putting $1 away. Is a
Yeah.
dollar enough? Because I know some people say, if I can only put $1 away, what's the point?
Listen, it's compounding interest. So do the dollar
Mm-hmm.
every time, every time. Like, the more that you're able to put, whatever it is, I tell my clients, if it's $5, you're now building a habit. So when you have
Mm-hmm.
$500 to put away, you're going to do that just because that is
Yeah.
now your habit, right? So no matter how small you think it is, I think at the end of the day, we are so in this comparison culture, especially because of social
Mm.
media. We see what we
Yes.
think everybody else is doing, but in reality, they're just showing us what they want to show us, right? At the end of the day,
The
that's just
highlight reel. Mm-hmm. Mm-hmm.
exactly. And we have to get over that comparison of, oh, well, you know what? I'm only saving $20 and it's not enough, because I'm sure my best friend's probably saving $100 a week. And that best friend is probably like, I didn't save nothing this week, but is what it
Right?
is. I'll try again next week, right? So we have to get out of that mindset of like, oh, I can't because this person's doing more or this person has better. You start with where you are and see
Mm-hmm.
what you can do and block out everything else. There are going to be people that have something to say about you wanting to do better for yourself, about you wanting to have
Yeah.
nicer things or wanting to live in a different place. at the end of the day, it's your life. And I tell my clients, you don't want to look back
Yeah.
on it and wish, wow, what if I would have did this? Because it's something I really wanted to do, but my cousin talked me out of it. Or my mom said,
Yeah.
don't do that. Don't move too far away because you'll be too far. Like my mom tells me, and I want to go to California.
Right. Right.
Love you, mom. But
Yes.
definitely just like blocking everything and everyone else out. And then just starting with where you are, because I know a couple of clients that I have that couldn't get an apartment at, say, one of the new high-rise buildings that they're building in
Right.
Philadelphia. Start with a private landlord. They are so flexible. They just want to help a lot of the time.
Yes.
And they don't have those same corporate rules. So if that means you need to start at something that isn't the fanciest, it's not trash, don't get it wrong. But
Right.
it's not,
Right.
it's not the new build and you don't have an island in your kitchen or anything.
Right.
Right? But you have somewhere to live. You've now built up this reputation that you are a good tenant and you can afford to pay your
Yes.
rent. And then you have a landlord that trusts you or write you a letter of recommendation for the next place that you may go to.
Mm-hmm. Mm-hmm.
Perfect. Like I think just starting with where we are and again, not beating ourselves up, not comparing and being okay with where you're starting so that when you get to that point in that vision, you're like, wow, like I remember my fiance just said, like, I remember our first apartment.
Yes.
And here we are in our first house, like, wow, like we really did this. Like, and you have to start somewhere and then you just keep dreaming, but you put in those action steps.
Yeah. And it's so funny that you say start small, just do the dollar. I have someone sent me, I got really sick, and someone sent me this spoonful of comfort, which is the soup people, and it's really cool. You get this great soup and a ladle and some rolls, and I mean, it's just wonderful. And it came in a nice size jar. Well, I hate change. I hate it. It's heavy. It weighs you down. It's too much. And so I was like, you know what? Let me just start putting this stuff in a jar. And it is, like I said, it's a decent, probably a couple of quart jar, if not a gallon. And my brother's the same way. He hates change, and so he'll just put it in things. And I bought one of those little electric change sorter thingies. And I tell you what, if you're not really thinking about it, but you get into the habit of every time I see change, I keep a little in my car because if you need it, but I just drop it in there. There were a couple of times where I'm like putting a couple of $100s in the bank of quarters and pennies and nickels.
I believe you. 100%. I worked at a bank for a long time. We had a coin counter right in the front. And people would come in all the time. And we would as much as they were pouring in, we would all guess how much change do you think he had? And then he'd come up with a receipt, $1,246.88. And I'm like, how long have you been saving that? He's like, oh, we do it every year. Every year they have the big gallons of the water jugs.
Yes.
My dad does it. It's one of those, like you said, out of sight, out of mind. You drop it in and then you take it in a year or a couple of months, however full it gets. And then you're like, oh, great. I got a couple $100. I'll take
it. Exactly. And it really does make a difference. And I think separating, like you said, separating the stuff that you're truly saving to save, like your emergency fund, the stuff that you're saving for a purpose, right? And then the stuff is just like spending money. So there was a guy at church years ago. He's since passed away. And he said, yeah, I've got all my $5 vacation fund. I'm like, $5? Where are you going for $5? He said, no. He said, when I pay cash for something, if I get a 5, I save it. And I'm like, oh. So my mom and I started doing that for our travel account. So every time we get a 5, we put it away and put it in travel account. And we ended up with, we had a couple of $1,000s, right? We spent some on a trip and now we got what's left and we just keep adding 5s to it. But we know that money is set aside specifically for travel. We don't use it for anything else, but we know we're going to spend it. And I told her, I said, but I had to laugh because every once in a while we'll call each other and we're like, I just spent a 20 and I only had a 20 and it cost me $3 and they gave me 3 5s. Now I got to put the 3 5s away. So there's a downside if you're going to be disciplined about the $5 vacation savings, right? It's a pain, but it again, it adds up, right? It adds up over time. And it's so, to your point about having something there that's comfortable, that you're not going to be in a panic. Us knowing now we've got this money, if we decide to go somewhere, we're like, oh, we don't have to tap into anything else. We've got our travel savings account. We can use that for our souvenirs. We can use that for the hotel. We can use that to go out to eat. We can use that for the specific things that we do for travel, an event we're going to go to. And it's just so freeing to know it's there.
Mhm. It is. It is that the travel account, knowing that your savings account is there.
Mm-hmm.
God forbid we could all got fired yesterday, knowing that
Right.
okay, I have this underneath me to make sure I'm not as stressed as, oh my God, my rent's due on Saturday. How am I going to take care of this? Right.
Exactly.
I
Exactly. Yeah.
don't
Yeah.
believe it's like it's the first thing. Saving is so important. Nothing else would matter
Yeah.
if you
Yeah.
can't do that, right? So
Right.
definitely building that habit. And like I said, looking into benefits, goals
Mm-hmm.
that you have, like, I'm sorry, the benefits package that you have through work,
Mm-hmm.
understanding that. I know a lot of it is
Yes.
like mumble jumble, right? So reach out to an
Yeah.
advisor, reach out to a consultant, whatever that person is for you,
Absolutely.
and just have them go through it. Because once you know what you have, think of it this way.
Mm-hmm.
So a lot of long-term disability policies that you get through work cover
Mm-hmm.
60% of your income.
Yes.
If you make 100,000, you're out of work for 90 days. You're now making 60,000.
Yes. Yep.
The government could care less that you're
Yeah.
disabled, so you're still paying
Yes.
taxes. So now think you're
Yes.
making 40,000, and with 90% of Americans still living paycheck to paycheck, nobody
Yes.
that's making 100,000 is going to really feel comfortable making 40.
Right.
Nobody.
Right.
So knowing how that benefit package works, you can now set up either supplemental coverage or know that
Mm-hmm.
you have and can save more than the 6 months, because if something does happen, you'll be
Right.
either selling your house or you'll be selling some other asset, your car, you'll be downsizing, you'll go into credit card debt, personal debt, and it'll just become a spiral. And then it'll
Mm-hmm.
seem like nothing in the future can happen. Still can,
Right.
hopefully,
Right.
right? If you get to go back to work, but it's all the what ifs that I
Yeah.
make sure that my clients cover. Like, hey, what are we going to do with this risk management? Because I can invest your money all day. We can save, we can get really sexy on this end. You'll be really
Right.
happy.
Yeah.
But if this happens, you're like, oh, wait, Ashley, hold up. I just lost my, can
Right.
we stop this? Like, whoa, 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 whoa. And it's like, wait a minute. The plan only works if we do X, Y, and Z each year, each month, or every time you get a raise, or whatever that
Exactly.
looks like. If that stops, a lot
Yep.
of these things don't happen.
Exactly. Exactly. So how, as because I'm looking at time, I want to be respectful of time too. And Sonia, feel free to, if you have a question, to jump in and ask to be on stage. Woody, Jenny, you're on stage now. And if you have a question, please jump in.
I do have one when you're ready.
Yeah. Yes, go ahead.
I was wondering if we could talk a little bit about where debt falls into this whole scenario. Say hypothetically, somebody might have some credit card debt, and hypothetically, they might also have a little bit of savings. So, should you use your savings to pay off your credit card debt, or should you keep your emergency savings because there might be an emergency?
Jenny, great question. I'm so glad that you asked it.
Yes.
Please keep your savings, because at the end of the day, that credit card debt is going to be there, unfortunately, right?
Right.
We can definitely, I do help my clients figure out their debt pay down strategy, what makes sense based off of their cash flow. If they are closer to like 50-30-20 instead of 60-20-20, they have less fixed expenses, we can definitely put more towards debt. Let's get rid of that. But there are good debts and bad debts. Considerable, right? Student loans considered a good debt. I know everybody wants to get rid of it, but it's considered a good debt. Mortgages considered a good debt. Credit cards, auto loans, they're not considered good debts, and it's usually because they're higher interest rates. So you're paying more. You spent $100 for a shirt that's going to end up costing you $250, right? If you're not paying that off. But in the event that an emergency happens, you use all of your emergency savings to pay off your credit card. Now you got to use your credit card to take care of the emergency, and you've just started a whole new cycle when you were trying to get out of that debt in the first place, right? So you can definitely, like, if there's an excess of cash flow, you could definitely be diligent in saying, I'm still going to save, but I'm going to start to pay this off. Or say you have your 6 months of emergency savings and you stop saving for a period of time to get rid of some of that debt. That's great. But don't take away that savings account to pay off that debt in the event that something happens, you need it, and now you're back in debt.
Awesome. Thank you. I appreciate that answer very much.
Great question, Jenny. Sonia, welcome to the stage. If you have a question or a comment for Ashley,
Thank you. I
you're
just
welcome.
I'm just listening in, so I'm just enjoying all your discussions.
Oh,
And
thank you.
about the financial person, right? I'm just from Canada, but So just
Okay.
getting information on the US side of things. So that's all.
Yeah. Yeah, and I think even globally, that's interesting because even globally, I remember when I was finishing my MBA in Spain, and we would talk sometimes about money and student debt and all that kind of stuff, and because unemployment when I was there, unemployment was at like 18%. Now it's gotten outrageous. I think it's gotten a little bit better in Spain, but we would talk about that all the time, and student debt and student loans and the fact that even though we consider them good debt, it's a lot when it takes you 10 years to pay off a student loan, and people are all up in arms because you got the debt, and you should, as you just said, Ashley, it's not the debt, it's the interest rate.
Mhm.
It's the interest rate that kills people. It's not. I don't hear any people, at least in my circle, that are saying, yeah, you should just get rid of it all. It's like, no, 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 I don't mind paying my debt. I don't mind paying my debt at all.
Mhm.
It's the interest rates that's killing me. Can we do something about the interest rate? Because that baseline that I borrowed, absolutely all day long, I borrowed it. I was prepared to pay for it and want to pay for it. Does it have to be at 4 million% interest rate? Can we do something about that? So it's that all or nothing mentality sometimes we have that we can't seem to deal with.
Yeah.
So as we kind of wrap up, number one, I want to say thank you so much. This has been so informative, and I think we're going to have to do it again, Ashley. We're just going to have to do it again, because I think it's really an important conversation for people to have, to think about not only planning but also about possibilities, right?
Yeah.
Really think about the possibilities with money. You don't have to be making tons of money to save money. That's a lie, right? But like as you said, the comparison thing. If I can't save $400 a month, then what's the point? Well,
Why
the
am I
point
doing
is you save what you can,
Exactly. Exactly.
because some is more than none.
Mm-hmm. Exactly. And it adds up so fast. Like you said
It
earlier, out of sight,
does.
out of mind. Automate that savings. You don't miss
Yes,
your health insurance when you're paying for that because it comes out automatically. You don't miss your 401k when it comes out automatically.
exactly.
Take it out
Yes.
automatically. You will get used to it. It'll suck the first month. The second month, you'll be
Hmm.
like, crap, I forgot I did that. And by the time the third month
Yes.
rolls around, you're like, whatever. Is what it is.
Yep. You begin to live with what you're taking home, right? And really paying attention to that. And if you come up with, I got one more question, but then I'm just gonna say, if you come up with a way to like go to Target and not spend $500 when you went in for a toothbrush, let
Let
me
me tell you what I
know.
started. Yes. Actually, yes. Okay. Only because I'm so guilty of this. But, we were saving for a house. I was like, I got to get it under control.
Yep.
I do all of my Target orders drive up, all of them. So it's like I put in my cart what I need and I check out and I drive up and they put it in my car and I can't
That's
get
a good
tempted by
point.
anything that I walk past in this store.
That's a good point. Because, see, you walk in to go get the toothbrush, but you pass by the sweaters and the shoes and the cleaning stuff that you forgot you needed, and the book and the cards and the stuff,
Yes,
the
everything.
stuff.
You're like, I
And
need it
it's
all.
not just end cap at Target. It's not just the end cap problem. It's the whole store.
It's everything. You walk in
It's
and there's
everything.
some type of like intoxicating stuff in the air. It's got to be because
There's something.
I'm
There's
just like, I'm not
something.
walking in the door. I'm drive up order
I,
only, put it in my car, and I'm out.
that's a good idea. That's a good idea, because it's walking through. Every once in a while, I'll go in and just get the thing, but
Yeah, it's
it's
those times
rare.
when you don't. When you don't.
It's rare. So
Well,
I
if
want
not,
to.
you make sure you're using those Target rewards though too. I'm gonna plug Target for you.
Yes, I do that. I do
Yes,
use my Target rewards, man, because I
yes,
love me some Target. Love me some
yes,
Target. Because they also support women-owned and Black-owned businesses. So they use small businesses as to stock, right? Their buyers buy from small business owners. So I love that. I love
me too.
supporting that. So Ashley, as we get ready to wrap up, and thank you all for being on the show. And I will get the replay up here in the next week or so. We'll get the replay up so people can come out and look at it. And it's been broadcasting live to YouTube as well. So hopefully some people are turning in there. Tell people, and we'll put it in the bio too, but tell people if they are looking for someone and they're looking for some coaching, counseling, support, guidance, how can they get in touch with you with their money questions?
Yes, definitely. So best way to reach me is email or my website, which are exactly the same.
Yes.
minus like a period in different places.
Right.
But my email is my first name, Ashleigh. It's spelled a little different. Everyone always says, I've never seen Ashleigh spelled like that. And I'm like, I had
Yeah.
nothing to do with it. It was my mom. But
Right.
my first name is
Yeah.
ASHLEIGH.John, JOHN, at N as in Nancy, M as in Mary.com. Website's the same, www.ashleighjohn.nm.com. All of the conversations that I have with my clients are completely complimentary. I do believe that financial wellness, financial literacy should be brought to as many people as possible without them feeling like I have to pay you $1,000 just to have a conversation with you. No, let's talk. Let's see where you are. Let's see if it's a good fit. Let's see if there's something that we can help you with. 9 times out of 10, 10 times out of 10, there's usually something that I can help bring value and continue to help them get to that vision.
Yeah.
It's all about that plan, right? What are we going to do?
Yes.
Don't get in the way. Sometimes we have some really tough conversations. I've had a lot of people cry in those conversations, but I think out of those emotions, it just comes that vulnerability, right? And it comes that honesty. And then you can just feel like it's very comfortable, not feel like anybody's judging you, because I can't judge a soul, right? I'm not here to judge you. I'm just here to figure out, hey, how are we going to build to where it is that you want to go? So when you buy that house, you call me and you invite me to your housewarming, and I'm like,
right,
right?
We did it.
That's a good feeling to me, and just being able to be a part of that. As many people as I can connect with. I know that I said I'm based out of Philly in Pennsylvania, but I'm licensed in over 25 states right now. So I'm working with people all over the country. My farthest client is in Hawaii, which I think is pretty cool. The time difference, but again, we make it work. Right? So I love just being able to, be that person that safe space for people to like, hey, I just want to talk to you. I have a question. I need to figure this out. And most of the time people are like, hey, I'm so glad that I met you. And that to me is like, that's awesome. Like, I just want to have that little piece to help you get to where it is that you need to be. So any questions, or, you guys want to continue the conversation one-on-one, feel free to email me, or like I said, visit my website.
Yes, I love it. I love it. I love it. I love it. Y'all, I'm going to put this replay up. Anthony, it's so good to see you. We're about to wrap up the show, but Ashleigh, you are phenomenal. Thank you so much. One, thank you for reaching out. And then thank you for agreeing to be on the show, because I think there was some comfort that people are going to get from this, that they can start where they are, that you don't have to have $1 million to be starting to save, that it is okay. And to really remember to make a full circle financial plan when you're setting your vision and creating your plan to achieve your vision. You got to think more than just how much is it going to cost me to make the kind of money I want to make. You got to think about it full circle, all of the pieces around finances. And that's what you have given us a piece to do. So thank you, thank you, thank you for being here. Thank all of you for being in the audience, whether you're watching live on YouTube or whether you're on the Fireside app or wherever you are. Thank you so much for being here as part of the show. I will get the replay out for you guys to listen to it. Definitely check out Ashleigh. Go get your financial literacy. Go let her, help you through some of those things. Go check your money. Go check your money. I've got my list right now. I will be checking my money on Friday. Always know where your money is going. Know where your money is going, and write your own checks. As Oprah said, always sign your own checks. Make sure you know where your money's going, and reach out to get some help in a place of no judgment, with compassion. I think that's what you heard from Ashleigh. So thank you all for being a part of Alignment Vision Action here on Fireside. We will be doing it again next week, and next week starts Breast Cancer Awareness Month as well. And so we are going to be interviewing some people who are doing some great things in terms of breast cancer awareness and breast cancer fitness and cancer fitness. So join us next month for some of those guests as well. Ashleigh, thank you.